good evening to you. Welcome to our page, the only page that tends to bring to you all that transpires in the Forex world. So during the course of the week, we had a couple of very important releases from the US, most especially the CPI data that came out very underwhelming, anyway, I should say. So in our previous video, we discussed about the possible effect of the data that would have been released should it go less than expected, what we should be looking forward to doing in the market, and should it go the other way around. So just like we knew in the previous video, we expected the CPI data to come in at 3.4% year on year. So at the end of the day, it came out at 3.3, which was less than predicted. Of course, when we begin to have a CPI data year on year going less than expected, that means inflation is beginning to slow down in the US. Same applied to the core CPI data. Core CPI data was anticipated to be 0.3%, and it came at 0%. And later in the day, we had the president of the Federal Reserve of the US coming up to give some economic projections for the month of June going forward till the end of the fiscal year. Of course, what happened? We saw that interest rate was left unchanged at 5.5%, and where other central bankers were cutting interest rates, the Fed decided to hold interest rates for longer. What was the ripple effect of this data was that the US gained strength, and you saw the likes of Bitcoin, Ethereum, just like we predicted, Bitcoin getting some boost to an extent. But then when the Fed delivered its hawkish remarks as regards to the outlook for the economy, we saw a resurgence in the dollar. So we also saw some level of good performance to the upside, which was later reversed by the hawkish comments of the Fed. So the Fed has signaled their intention to hold interest rates for as long as they believe would help return inflation to their 2% target. So as traders, what will you be looking forward to? Of course, a long-term trader, you should be looking at the odds of having the Fed cut interest rates maybe sometime later in the year, looking to do that based on the existing data that is available to them. With a CPI value of about 3.3%, it tells you that the Fed is right on track to their 2% target. So moving forward, we also had the producer price index data that was released as well. Okay, just like we had core price index, we also have producer price index. Producer price index, of course, is a change in the prices of goods sold by producers. Okay, that's exactly what that entails. Okay, we also had the core price and the core PPI too. When you're talking about core, it's excluding food and energy cost or prices. Okay, so looking at the data that was released about the PPI, it showed that the PPI came down a bit from what it used to be before. So it was another interesting one to see. Investors had already started placing bets on possible rate cuts. So with the PPI data that was put forward, it has given the Fed yet another reason to consider September rate cuts. So what we should expect when we eventually get a rate cut, you're going to find likes of gold and some the altcoins and Bitcoins may just pick up, and stocks will always do well once the USD is down. So that's exactly what you should be looking forward to. For now, you want to keep your heads up, doing your trades, making sure you're applying risk management in whatever trades you take. I must really encourage you, if you will trade, always look forward to the right pairs. Okay, look forward to the right pairs. The JPYs that I've always encouraged us to take, look for possible pullbacks, pullbacks that you want to buy. USD JPY is an example of a pair that you want to expect it to do a pullback, and whenever there's a pullback, you want to go in as a buyer. Same thing applies to GBP JPY, currently selling at 200 bucks, 200.16 cents. So any minor or major retracement, you want to cash in on that and try to buy the dip. So for those of us that are long-term investors in gold has slightly depreciated to about $2,307 per ounce. So it's another opportunity for investors, long-term investors, to add to their portfolio, right? Because with the outlook for the US dollar, it's almost looking like the Fed may be pivoting so soon, and once they pivot, then you're going to see some resurgence in other commodities and some depreciation in the US dollar. So I hope this video was helpful to us, and the intention of the video actually is to give us a broader outlook as to what to do or what to expect in the market based on the big data releases for the week. So do well to drop your comments if there's any section that you feel needs more clarification, and we'll do well to respond to them. Also, you check out our YouTube page, go there, like, subscribe, so that you will get more videos as they come up. And until then, do enjoy for yourself a good night's rest. Bye.